Good afternoon, Coastal Southern California. I'm Jennifer Timm. I am a real estate wealth advisor, a licensed real estate professional in both California and in Oregon. And I am back this week with our midweek market brief for Coastal Southern California. And of course, this is where smart money watches the market. And we've got a little bit of good news today. So very excited to share this. Hot off the presses for our national outlook is that the Feds cut the rates again, but with caution. So the Fed approved its third rate cut of 2025, lowering the target range to 3.5% to 3.75% in a divided 9-3 vote. Two of those against wanted no cuts whatsoever, and one actually wanted a 50 basis points cut. So we just had a 25 basis points cut. Now, again, this is the Fed rate. It is not the same as the mortgage interest rate. So no, unfortunately, no, fortunately, interest rates are not back down into the threes for your mortgages. So a hawkish cut, signaling no rush for more cuts in 2026 unless the data justifies it. Fed also announced $40 billion in treasury purchases, aiming to stabilize markets and stimulate liquidity. Labor market weakness, especially among small businesses, weighed heavily on the decision. As I said, this was definitely the first time that we've really seen this divided Fed vote come out. Core inflation eased to 2.8%, opening the door for monetary policy easing, and the GDP revised up to 2.3% for 2026, but long-term inflation expected to remain above the 2% target. So our housing market snapshot, and this is at the national level. Inventory rose, so it's 12.6% year over year, but growth is slowing. National list prices dipped just 0.4% year over year, and homes are sitting longer nationally on the market, so 64 days on the market, which is an increase of 3 days year over year. Delistings surge, so that basically means sellers put their homes on the market and then decided to pull them off the market. Excuse me. Nearly 6% of listings withdrawn per month since June due to affordability pressure, and that's a combination of a lack of buyers to buy particular homes, and it may also be that those sellers are looking if they need to buy that next home and realizing that actually staying in their current home is a better option. National rents fell 1% month over month, now down 5.2% from the peak in mid-2022, and affordability is driving demand towards refuge markets like Grand Rapids, Cleveland, Louisville, and Providence. Our mortgage rate watch. So, of course, that's always the big question. What happens? The Feds announce a cut, and basically, I waited a couple of hours after the Fed announcement, their press conference, to see what would happen. And this is as per Mortgage News Daily. So this is their latest update after the Fed cut. So mortgage rates improve after the Fed announcement. The Fed cut its policy rate by 0.25% today, and mortgage rates moved lower after the announcement. That said, these two developments are not related. So again, there is no direct correlation between a Fed rate cut and a mortgage rate reduction. In fact, there was no movement in the bonds. It's the bond market that really controls mortgage rates, that underlie mortgage rates when the rate cut was announced. Instead, the market and rates moved in response to Fed Chair Powell's press conference. Again, a lot of what he says will influence either an increase or a decrease in the mortgage rates. While there is a mistaken belief that such press conferences always result in upward pressure on rates, today shows they can go both ways. Key comments that may have helped. Powell said job gains could have been overstated in recent months. He also said growing evidence that inflation is coming down, not at the rate that the Fed wants. Powell, rates are now in a high range of neutral, which means the Fed funds rate is near the levels that should neither help nor hurt the economy. Being in the higher end of that range means there could be room for another rate cut or two in 2026. This possibility was already reflected in the rate forecast that came out with today's announcement. But the market appreciated hearing it from Powell. Up until Powell's press conference, mortgage rates had been little changed from yesterday. Afterwards, most lenders made mid-day changes, resulting in the lowest rates of the week. And we're currently sitting at 6.3% for the 30-year fixed, and a 15-year is sitting at 5.80%. So again, positive news, and we're always going for positive news. Our national smart money insight: now is when savvy investors lean in. With inflation cooling slightly, inventory stabilizing, and borrowing costs easing, the window is opening for buyers willing to act while others hesitate. Again, buyers, if you're waiting for that dramatic drop in the interest rate or a drop in home prices, you're probably going to be priced out of the market, because it's not really, based on the indicators and all the housing analysts that I follow, that is not going to be happening. Investors already sense the shift. They always do. The question is, will you move with the market or wait for it to pass you by? And yeah, if this is something you would like to have a further conversation about, let's connect for a strategy session to see how today's rate environment impacts your real estate wealth plan. Because as real estate wealth advisors, we believe that your legacy begins with a real estate plan, and a strategy session is how we ask all those questions and help you develop a real estate plan to grow legacy. Our local market spotlights: Capo Beach, now with only 19 homes on the market, any slight movement really changes the numbers. Our median list price, $3.9 million, price per square foot up slightly, 1,140. So inventory is down, and median days on the market is 98. Now, our market action index has gone up slightly to 34. Still a slight seller's advantage. Our smart money insight: despite softening prices, demand is outpacing supply, pushing the market action index upward. This could be the final stretch of buyers' leverage before the market pivots. Again, the new year brings a new set of buyers, a new wave of sellers after the holidays, once they've packed all those holiday decorations away. Investors, monitor this closely. Current price dips may offer a rare entry point into a highly desirable beach market. And anybody who knows Capo Beach, it is definitely a special little place. Strategy: if you're eyeing Capo Beach, now's the time to negotiate on value while the market is recalibrating, but act before upward pressure returns. Moving on to Dana Point, our list price just under that $6 million range, price per square foot unchanged at 1,765. Our inventory, it has gone down, excuse me, to 38 homes, and our median days on market is up to 95, and we are slightly down on our market action index, so we're at 38, still a slight seller's advantage. Our smart money insight for Dana Point: we're seeing early signs of cooling, although it's still technically a seller's market. The index is sliding and inventory is tightening. Price correction could be next if momentum slows further. For sellers, consider listing before the shift becomes more pronounced. And for buyers, be ready to act if inventory opens up, especially if price reductions begin to accelerate. And what I will start introducing for all of our local market spotlights is the median list price for new listings. So I will add that information in pretty soon, because we know with the new year we should see some new listings coming on. San Clemente, our median list price is up just over that 2.5 million range. Price per square foot is up to $949. Our inventory is sitting at 74 homes. It's gone down slightly. Our median days on market unchanged at 84, with an unchanged market action index of 40 and still a slight seller's advantage. So our smart money insight for San Clemente, with prices stabilizing and inventory low, San Clemente sits in a balanced holding pattern. Premium coastal properties are staying put. This is a classic wait and see market. Investor note, track the MAI closely. A small change in demand could tip pricing trends quickly, especially with limited inventory in the mid-range segment. And finally, San Juan Capistrano, our median list price is up slightly to 2.178. Price per square foot up to $749. Inventory is up to 35. Median days on market is 35. And we have our hottest sellers advantage with an MAI of 50. Your smart money insight for San Juan Capistrano. It's definitely the strongest market of the four, as we have seen consistently over the weeks. A rising MAI of 50 signals clear seller dominance, and properties are moving fast. A median of 35 days. That is fast. Don't be fooled by the calm. New listings are priced well above the median, suggesting confidence and upward pricing power ahead. Again, it'll be helpful when I add in that extra field to show you the median new listing prices. Investor alert. If you've been waiting for confirmation of momentum, this is it. San Juan Capistrano is in growth mode, especially in the luxury segment. Don't forget to watch your feeds for data for some of the other areas that we follow. And our global perspective, kind of keeping it a little short and sweet this week, because we have something important to go over in our wealth building perspective. While headlines shout about volatility in global markets, real estate remains a steady force, especially in cities with strong lifestyle and economic fundamentals. So from Portland to Paris, Dana Point to Dubai, wealth moves where lifestyle leads. Real estate remains a preferred store of value for global investors seeking long-term security over short-term drama. And I happen to be listening to a couple of financial advisors today on a Zoom call, and they were definitely talking about how a great financial planner will discuss with their clients diversifying their portfolio, real estate, and other assets as well. So the Smart Money Insight, Real Estate Without Borders. As a certified international property specialist, which I am, and because I'm part of Keller Williams Global Network, I definitely have that ability to bring global with that local expertise. So whether you're buying a second home in Europe, selling US property as a non-resident, or navigating cross-border tax implications, you don't have to do it alone. We have access on our team to international attorneys, international CPAs, and wealth advisors who specialize in different regions around the world to help you, that we can connect you to. That is not what I do. I definitely help you with the real estate side. And then, of course, we have trusted Keller Williams offices in over 50 countries. And I personally have relationships with many of the top agents in those Keller Williams offices. Between us together, if you consider us a team, we offer guidance on foreign investment, currency strategies, and global portfolio alignment together with your financial and legal international team. Definitely different expertise to your local financial and legal experts. Smart investors don't just look local, they look global. So let's map out your next move together. So contact me, and we would love to, again, add that into our consultation. Or if you're looking to invest, we can definitely have that conversation too. So our wealth building insight, it is really important to know your cost basis. And we'll go into, this is very brief this time, and maybe we'll go into a little more detail next week. But it's when it comes to selling real estate, whether it's your primary residence or it is an investment property, it's not what you sell for, it's what you get to keep. And cost basis is a huge part of determining what it is that you get to keep. So cost basis 101, your cost basis is what you paid for the property or how you acquired it, plus qualified expenses like capital improvements, closing costs, and the fees. So the math is your selling price, subtract the cost basis, and there's a couple of things that go into that cost basis. And I think that's what we'll leave for a subsequent midweek market brief. And that's going to be your taxable gain. So your goal is always to have a higher cost basis, because the higher your cost basis, that then lowers your potential tax bill. And I have yet to find somebody who wants to pay more in taxes than they really need to. There's a lot more things we can do with that money. I think you'll agree. So inheritance versus gifting. Step up in cost basis. Heirs receive the property at its market value at the time of inheritance, resetting the basis and potentially eliminating capital gains taxes. So think of this as it's the difference between, and let me read the second one because then that really helps explain it. The carryover basis. If you gift a property during your lifetime, the recipient inherits your original basis of when you obtained the property, whether you bought it and or you inherited it, which can then create a significant tax burden. So that is really an important factor to consider when you're doing your estate planning. I often hear about folks who thought it was a better option to add their loved ones, their children in most cases, onto their title deed before they passed away. Biggest tax headache you can imagine. You're just burdening them with a huge, potentially a really big capital gains tax bill. Now, again, this is basic information, and we do encourage you to go and have that conversation with your financial experts. So missed opportunity alert. Many property owners don't realize that a well-maintained cost basis record can unlock smarter exit strategies, from 1031 exchanges to wealth transfers. And that investor mindset matters. If you don't know your cost basis, you're running your real estate business blindfolded. It is really, really important to know. And that is our smart money insight for wealth building. Understanding your cost basis and whether your property qualifies for a step up or is subject to carryover can mean the difference between tens or hundreds of thousands in taxes, or zero. I know which one I'm working towards. So we offer a napkin test. So basically that means if you want a quick look at how your investment, and whether it's your primary property or it's an investment property, is performing and what your cost basis might be, definitely reach out. Now, we know how to do the math. We do it all day, every day for our homeowners, our investors, and just give them, we run the numbers literally on a piece of paper. We know how to do that. And then we kind of show them. And then that at least empowers those property owners to then go to their CPAs, their financial advisors, with something to further the conversation. We're there to work with your financial team and your legal team to then help you build and achieve a real estate plan. And we would be so honored to be able to do that for you. I love the math. It is not crazy stuff. It's very simple to explain, and boy, does it just kind of makes you more knowledgeable, as you should be, about your real estate. So do you know your cost basis? If you don't, definitely reach out. So in today, if there's anything that sparked your interest, your intrigue, any questions, or inspired the next step, I'd love to connect with you. Let's set up a strategy session to go through cost basis. Let's talk about how you're positioned with interest rates, and then just help you through many, many questions, very targeted, to help us understand what your real estate goals are, and then to help you as real estate wealth advisors, we help folks build, protect, and transfer generational wealth through real estate by developing that real estate plan and then helping you actually achieve it. So we'd be honored to do that with you. Just that quick disclaimer again. The material is provided for general information purposes only, should not be construed as investment, tax, or legal advice. We do obtain the information from very credible sources, very timely, pulled today, and we can't always guarantee or warranty the information or the results from using this. And again, that reminder, this is intended to be taken to empower you, and then together with your legal and financial team, we work on a plan together and we help you on the real estate side. So that is the end of our Coastal Southern California Midweek Market Brief, and I look forward to seeing you next week. And I think next week we will start having a look at some of the predictions for 2026, as well as kind of just see how the market's behaving. But we're getting close to the crazy holiday time, and we'll definitely start working on those updates. So look forward to seeing you next week.